Hey everyone, Les here from BG Trading and I hope you are well. Today is March 16, 2023 and I'll be analyzing from the technical perspective 5 stocks that you have chosen for us in our community buy and growth sales strategy for share traders on Facebook. If you haven't yet joined this community, I'm going to be putting the details at the description below. In this community, we share a lot of great quality stock analysis, macroeconomic overviews, and great discussion with our members about potential opportunities on the stock market as well. So the stocks that we're going to be analyzing is LITHIUM Resources, is HARTSHEAD Resources, European Lithium, Commonwealth Bank, and ZipCo. So let's have a look. I just want to remind you, this isn't a financial advice, it's just as from BG Trading sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, avoid FOMO, and much more, all in this channel by using BGS 20 strategies. So if you like the content, please subscribe the channel, and also wanted to let you know that we have our online course, trading course. This is not a better time to start learning about the stock market and take advantage of what could be a potential rally from the second half of this year, as things has started going really bad. Remember, when the market starts collapsing, great opportunities ahead. But at the moment, we just gotta mitigate the risks and stay safe. Start with the first stock, LITHIUM Resources, with the ASX code is ALRS. First thing, like any stock analysis, anytime we provide an overview of the market, we want to make sure all our indicators for BGS 20 are on the screen. And the first thing, once we have the indicators highlighted, I just highlighting all the indicators, we wanted to analyze exactly where the stock is currently sitting on the long-term trend, short-term trend, and its share price trend, to find out whether it is sitting, the stock price is sitting at what we call technically discounted price, which is our ideal entry position, or it is trading in the FOMO area, or lastly at fair price. Okay, so 3 different entry levels, and which the best one for us is buying at technically discounted price. If you want to understand those, again, like we have the online course, look these guys. LRS is currently sitting what we call technically fair price. Okay, it is an exploration company. Okay, so you gotta be understanding that the risk is really high on this type of stocks. Okay, especially at the contraction stage of these economic cycles. Material stocks tend to go down. So we have seen already BHP going down, other iron ore stocks collapsing, lithium stocks collapsing, and then I'm really got to be careful with this type of stocks. It's not something that I would be touching right now, even if it was at a technically discounted price. Okay, so looking at the risk, I just mentioned that I'm not going to be talking about the fundamentals, but you need to understand that this company generates no revenue and just burning cash in order to finance its exploration and potentially develop its project. So thereby posing a very high risk for anyone that wants to invest in this stock in the current macroeconomic situations. Okay, so very risky at the moment, this type of companies. I'm not interested. I might miss a big rally or something, but I'm not interested at the moment. From the technical aspect, again, it is trading at technically fair price. Ideally, I want to buy a technically discounted price, which is well below this pink line there. Okay, that's Latin Resources. At the moment, I would not be touching. Now, the second stock that we wanted to analyze is HARTSHEAD Resources, which the ASX code is HHR. Here we go. Okay, even with this big market correction, those two stocks that the first one and this one, they actually being very resilient in terms of holding its value at the moment. So HARTSHEAD Resources, essentially, we haven't actually analyzed that stock before we even look at. And I quickly went to check what the company is about. It's about a gas exploration in UK. So essentially, with energy prices and gas sort of falling as results of macroeconomic degradation, I probably wouldn't be touching on this type of stocks. Very speculative as well. And if we use the same rationale that we used for all the stocks, and this is a very high level way to look at and understand a little bit the risks. You see the company generates no revenue. It's not really a good investment unless you know what's happening on the pipeline. It's all about announcements and potential results coming out of this exploration phase. So really be careful with these type of stocks. Okay, I've seen a lot of people getting knocked out by companies like this. The stock is currently trading at the FOMO area as well. As you can see here, it's trading above the SMA 40. I'm not interested at all for those two particular reasons. Basically, first one, macroeconomic degradation. Second, technical aspect is ideally more expensive than we really like to. And the third is the fact that doesn't generate any revenue right now. Again, it's if you want to take a risk, that's fine, but it's not a type of stock that I consider an investment, really. This is a completely speculative stock. Now, let's move to European lithium. Like lithium stocks, lithium prices continue to collapse. So when we have the last peak on economy, so that's when we had major rallies on lithium. Now with contraction, material stocks tend to go down in price. So we've seen that already happening. I wouldn't be really touching in this type of lithium stocks. First of all, because we use the same rationale to look at, the company keeps increasing its debt, its loss, and generates no revenue. So making it extremely dangerous. So we'd rather go to in the lithium sector with companies that are currently producing, such as Pilbara and Allkem and even CXO, rather than touching on those type of stocks. Okay, currently trading at technically discounted price. Okay, but this bearish intersection level 2 here, which essentially means the red candles crossing the yellow line towards to the downside, points for a further downside. And I don't want to take any risk on these type of companies with the current macroeconomic degradation. Okay, so for me, I wouldn't be touching on this stock. So for the reason I just mentioned. Now, let's move to Commonwealth Bank. CBA is the ASX code. So obviously, this is the Australian largest bank in market capitalization. This is one of the investment grade type of stocks. It has come down with this multiple banks collapsing. We have seen a major decline on most of bank stocks, and CBA has declined about 15%. 15% of its overall value, and that obviously offers in this case a very interesting long-term investment opportunity. Technical perspective, using our indicators, which is just putting the SMA 250 here. Okay, the stocks trading, Commonwealth Bank's trading at technically discounted price, not only on the short term but on the long term trend as well. Okay, so therefore offering a really interesting opportunity. The only red flag we have here is how severe it's going to be this current situation with the banks. Potentially we could see CBA sort of breaking out this support level here at 80 cents. So it's currently, if I was going to enter into Commonwealth Bank, I would be looking at buying around $80 if possible, between $80 to $90, but not above that. Still a little bit expensive as per the current macroeconomic situation. However, it's by far the best stock we have this list here. And that's what I want to show you. We're using the same rationale. You can see here that company generates not only revenue, steady revenue, and but also steady profit, steady net profit, $10 billion profit, $10.7 billion profit in FY22, and steady dividend. So this is probably the ultimate investment opportunity here in this list, okay? Especially for conservative investors and people that want to sort of retire. Again, this is not a financial advice. I'm just saying that from my perspective, what is Commonwealth Bank at the moment. Definitely a stock to look at. And if I was ever going to buy Commonwealth Bank, I would be buying at the current levels or below when it's trading 15 or 20% below its all-time high. I just want to show you here what happened, how low it went in COVID. And that's just one thing for you to realize that when we had the COVID crash here, the Commonwealth Bank went down to $50. Okay, so that was a massive crash. So could that happen again? Could Commonwealth Bank really go to sort of a $50 as it did in back in 2020? Yes, it can. It can. And this is a big red flag at the moment for all banks. All we need is another one or two banks to collapse, and we probably will see a major crash on the bank. So really got to be careful with this, okay? Even if a collapse happens, this is type of stocks that will most likely bounce back in a 6 or 1 year term after the potential collapse. So for now, I'm only watching those stocks across the board. But if you see, like back in 2020, when we have the major crash, the FY 2020 was pretty much in line to what it is now with smaller profits. So what could happen is with the decline in macroeconomic, we could see a shrink of its earnings, and mostly because a lot of people might enter into a mortgage stress on business start default, and then that could affect the earnings of the bank. So obviously the market's sort of a kind of pricing that in now. But if that happens, then we might see a downturn on even on Commonwealth Bank. But definitely the strongest bank in Australia, and definitely is an investment grade company. Just watch out for this support level here. Okay, let's move for the last stock is Zip. Zip code ASX code is ZIP. Okay, so this is stock that if you're following us, we have been trading many times. Has been incredibly profitable for us. The best trades we ever done at BG Trading, in fact, was with Zip back in 2021 and 2022, early 2022. And then we also have done a really good trade at the end of 2022 as well. Now, what's happening with this type of stock? Again, the problem with Zip at the moment is the fundamentals, okay? The management keeps promising the company's improving. The reports showed underlying EBITDA improvements and everything, but the actual loss continues, the statutory loss continues to increase every single report. And that is the major problem with this company. And if you look at here at FY22, you see how the loss has increased massively. Obviously, this is all most generated by the hangar the company has for acquisitions, and then most of acquisitions has to be trimmed due to the contraction on the macroeconomic situation. But in what could happen now in FY23, we don't know. I'm just speculating. Okay, the first half of FY23 report was worse than the first half of FY22 report. Okay, but if the second half is in line with the first half, then we're going to have a major improvement on this net loss, and that is when I believe things are going to turn around for a zip, but not until this contraction phase ends and we start going through recovery phase. Okay, that's when the things stocks like this will definitely bottom line, and then on the expansion phase with the following phase we essentially have the major rally. Wanted to understand a little bit about economic cycles. I have just posted a video last night, and the second video here on a major recession is almost certain economic cycles. The second video talks about the economic cycles and understanding a little bit what type of the sectors tend to outperform into this contraction, into recovery mode, and all stages of economic cycle. So really worth taking a look at. If you invest, if you don't have much experience, take a look on that. It's a very valuable information, guys. Very valuable information. Now, from the technical perspective, in ZIP, the stock starts breaking sort of a 50 cents hypothetical support. Although ZIP is not a stock that normally tends to follow any sort of indicator, but the lowest point here for ZIP was around 44 cents, and that's what probably with this major market correction, that's what probably I think is gonna end up moving towards. And we can see at the moment, last trade we took a stop loss. We've been trying to get into ZIP every time we have this sort of reversal here, but as soon as the reversal fails, we pull out our positions, obviously, and wait for the next big confirmation. And that's how we make our big trades. Once we have acceleration on the upside, on the volume, then that's when we start piling up larger positions. In this case, I wouldn't be touching on ZIP until I see a major reversal on the stock market. Now, remembering that on the 22nd, we're going to have a Fed FOMC meeting, and then in this meeting, they're going to decide the monetary policy for the next month, and then that's going to dictate exactly what's going to happen with this type of stocks. Okay, but overall, for the short term, especially after this macroeconomic contraction, it's very likely that we won't see a massive rebound unless Fed comes next week and all of a sudden decide to cut interest rates from nowhere. And that's when things will start changing, therefore confirming a pivot on interest rates. If that's the case, you got to be watching closely. At the moment, we are just speculating. Analysts don't know what's going to happen. Half of analysts thinks Fed will increase 25% points. Other half are tipping for even a interest rate cut after the problem with Silicon Valley Bank. We don't know what's going to happen, and better than speculate is at the moment to have our positions protected. Guys, this is the last stock. Zip, hope you enjoyed this analysis. Please put your comments at the description below. Let us know what you think. And yeah, and I'll see you in the next video. The whole idea when we designed BG Trading BGS 20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.